last time the Chinese central bank let the yuan fall below 7 to the dollar, it was to help prop up the economy during the global financial crisis. On Monday, a similar depreciation was seen by analysts as a way for Beijing to offset the impact of new US tariffs, and it drew criticism from US President Donald Trump.
China dropped the price of their currency to an almost historic low. It's called currency manipulation. Are you listening, Federal Reserve? This is a major violation which will greatly weaken China over time.
Trump has long accused Beijing of using its currency to put US companies at a disadvantage. A weaker yuan makes Chinese goods cheaper and therefore more attractive compared to their American rivals. Trump says he will impose a 10% tariff on $300 billion worth of Chinese imports. It's set to take effect on September the 1st and would include products like smartphones, toys, and clothing. If imposed, the latest round of tariffs will mean nearly all Chinese imports to the US would be subject to levies. In response, China says it'll stop importing American agricultural products, which the US says is breaking a pledge it made during trade talks. While the tariffs target Beijing, US businesses with a large manufacturing footprint in China are bound to take a hit. Toy makers like Mattel and Hasbro are bracing for a less than cheery holiday season.
This is the season when a lot of retailers in the US will be loading in their Christmas inventories for the Christmas selling season. And I'm sure many of those retailers are doing their best to scramble now to accelerate their imports, to forward buy their imports of goods from China.
Many business groups have urged against the escalation of tariffs, saying they'll likely increase prices of everyday items in the US and China. But these latest tariffs are so far painting a bleak picture of the prospects of a trade truce between Washington and Beijing. Laila Humairah, TRT World.
Let's get more on the story now with David Levine in Greenwich, Connecticut. He's the founder of the investment company Odin River. Welcome back to Money Talks, David. Now, just looking at the yuan now, it's ticking above $7 US dollars, that is, but as we know, it fell below that barrier. How worried are you by those developments?
Well, it's great to be back. I think one of the most important points is that this is happening in the context of an ongoing trade dispute. And with President Trump's latest increase in tariffs, one of the questions was, what will China do in response? And to see China allowing the yuan to weaken and to see them kind of dialing back, maybe even abrogating commitments that they made to purchase agricultural commodities from the U.S. shows that actually the trade conflict is intensifying. And so I don't know if this means that perhaps President Trump underestimated China's response, but at the very least, it shows that, and I think the markets today are reflecting that, tensions have definitely heightened even over the last 24 hours.
So do you think this is simply a scare tactic on Beijing's part, or will they keep this going, do you think, devaluing the currency?
Well, I think one of the speculations that I've heard in the last week or so, since President Trump increased the tariffs, was that perhaps this was a tactic on his part to get the Federal Reserve to ease, for instance. And so maybe he was, in a way, bluffing with the tariffs, hoping that he would get the Fed to ease. Now, to see China respond in this way, it doesn't seem to me, that it would be in China's at least historical pattern for them to act in such an extreme way unless they meant it. So I do think that, if President Trump was, increasing the tariffs as a means to get the Fed to ease, maybe it's backfired because, for China to let the currency fluctuate and to kind of stop buying the commodities, it does seem like a serious move on their part. Whether or not, I think the key issue from the Chinese side has been Huawei and 5G. Whether or not the U.S. will be willing to budge, say, on that issue, in the context of easing tariffs, it remains to be seen. But we're definitely further away from a settlement today than we were even 24, 48 hours ago.
Yeah, so you mentioned the US Federal Reserve, and we saw in that story that he basically mentioned the central bank in response, so strongly urging the bank to act to the devaluing of the yuan. I mean, what can the central bank do? Will a cut in interest rates automatically mean a weaker US dollar as well?
So this was actually asked explicitly. Chairman Powell was asked this in the question and answer session, just whenever he spoke recently, and he said, "Look, it's not in our mandate to target currency. We never target currency." And I think he meant it. It's not really the Federal Reserve's mandate to target currencies. And to answer your question as to whether 25 basis points move by the Fed would weaken the dollar directly, it's unclear, because there are many different things that are impacted by Federal Reserve easing, including the fact that China benefits from an easing. So it's not as straightforward as a 25 basis points cut and then the dollar weakens. In the first case, and probably more importantly, Chairman Powell explicitly rejected the notion of trying to kind of influence the dollar just recently when he was asked. So it's not something that I expect the Fed to respond to.
So based on the Chinese currency weakening below $7 for the first time in 11 years, do you get the sense that perhaps Beijing is ready to wait this situation out, that it isn't as keen or desperate as it was to reach a deal with the US on their trade war?
Well, President Trump has said as much. He thinks that, or at least he said that he thinks that China wants to wait out the election, which isn't really that far away. We're talking about 15 months at this point. And so, China's got a very long mindset in the way they think about both planning their economy, negotiating, agreements like this. And so I think it's possible that, yes, this is just showing their resiliency and their willingness to kind of, allow this thing to, take some time to unfold. And at the very least, it's showing that they're showing a position of strength and not really going to, allow, the United States to be the only one to kind of have strong positions or even strong actions.
Now, in addition to the weakening of the Chinese currency, there are also those reports that Beijing has ordered its state-owned companies to stop buying US agricultural goods. Now, that threatens to hurt Donald Trump's heartland, doesn't it?
Of course it does. And it's also, again, thinking about, the president's campaign strategy, it's really critical that those states support him in the same way they did in the last election. So, it's definitely a direct, response to request by the Trump administration. I know that the administration had requested even more purchases, and the president had stated those purchases would be happening. So it's probably both a strategic hit from China, but also a PR hit in a way, because this has been pretty central, at least, to the messaging coming out of the Trump administration. So it might even be a more aggressive stance. Now, I've seen some mixed messages coming out of China today. Some people suggesting that maybe they didn't order this.
Yes.
We'll see in the coming days. But if they did, it for sure would be a direct provocation, and maybe even more aggressive than the currency weakening when it comes to public perception.
Okay, let's see who makes the next move. David Levine in Connecticut, thank you again for your time.